Hey everyone. Let's give people a second to join and then we'll start. Oh, it was a pretty interesting week. Fortunately, we did know that there was a lot of overhead around the 68, 10, 12, 08 area, so that could have played a role in terms of capturing a good chunk of the short. For me, it was mostly once they lost 67.88, 67.57, that was kind of like the point in turnaround, because we knew that if they came back and triggered 6.6, they would easily test the 67.20s. So we can just do a very, 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 very quick overview, guys, of our weekly ranges, the spots that we knew had. I'm not going to really put anything in the 68.20s here just because it doesn't really matter at this point since they failed those areas there, but essentially kind of like this range down here, the 9.4 area, I'm going to mark the 8.8, 9.1, and then we could just mark maybe the 6.6, 5.7, 5.8, 5.1, 5.2. The channel areas, I know we had a lot of support around here, but it was mostly the 67.20s. This 22 to 23 to 24. And then from there, I figured there isn't really any support unless they literally bring this all the way back down to the bottom of the zone, which they did. So we knew that there was a ton of support around here. And from there is where this could heavily increase a ton of volatility. And I think we had that really calculated range around 67 or 66.40, 66.33, 66.24 to 22. This was a calculated area. And from there, we knew that if they failed that, along with 68.06, I think, if they failed there, they could bring it to the bottom of the zone around 8.8. Okay, 8.9. I didn't really account for anything beyond that point there, so if we go to a 5-minute and just take a quick peek, our overnight conditions, they were partially met, not fully met, because they did hold the line. So part of the conditions for overnight on the Friday was that they tried their best to hold around the 67.80s, ideally 8.1, 8.2. No more than the 7.2 range. So like we wanted to ideally hold above 7.2, 7.6. So those were the overnight conditions from Friday, from Thursday, sorry, which I'm gonna copy paste here. So the first condition was this. So we can just kind of go through this, guys, to see what kind of odds we have, okay? So, and you do have to kind of pedal back a little bit. So let's just see where things kind of started here. So first conditions were avoid back testing lower, as we based far more than enough between 67, 62 to the 72 range. We could afford some risk back to 72, 76. So that's this area here. So we already knew that, okay, while they could afford some risk back to here, it's better if they had maybe just avoided a little bit, okay? So is everyone on the same page here? These were for Thursday overnight conditions before Friday started, because I think it's important that even like you have to kind of pedal back to make sure that our conditions are accurate and that we don't miss anything, okay? Because when moves like this happen, I want to make sure that everyone's really, really prepared. So these were the conditions that I had. I would say that so far, I don't know how to change that, Ryan. I have to manually change it every single time. I'm not sure why. I don't know what setting I have to change, but I always have to change it. So, okay, is everyone on the same page there? Those were the first conditions. Second condition was try to retrace zone areas early. We want to get back above, ideally, 67.90, 67.91. Okay, so we went back, we looked at this. They held 7.2, 7.6. They came back, boom, they tested 90, 89, 91, okay? I would say that second condition was met. Do you guys agree? Next condition was that there's going to be a huge wall around 67.94 to 96. So I did notice that they did stall there a little bit. They retraced it back to 7.9. Our 7.9 to 7.8 spots were really calculated from the day before. I'm not sure if you guys remember that. I think it was 79.50. I don't remember exactly. And this was the 81.50 mark. So I think that that was a good back test because holding off 8.1 I think was pretty healthy. So that was a good hold. They came back. They took out that wall. Okay. They took out 91. They stalled 94 right here, pulled it back a little bit to 90. I think this was a good back test. They came higher, pushed it to 01, 02. I would say that that was a pretty good. If 67, 90, 94 area stalls, the next condition was that they try to sustain off 7981. So you can just, I don't know if it helps you guys, but it helps me. Like when I'm setting conditions, I want to make sure that everything is being met. So, okay, if they're holding 8.1, then we have really high odds of taking out 9.4, 9.6, right? So all of these conditions here were met. The next thing was that we wanted to ideally test around the 01 during London session, so ahead of US Open. This was happening around 9:30 in the morning. So what do you guys think? Do you think that that condition was met? Did they test 9.4 to 9.6 to 01 during London session? This range in here. Well, not really, because they mostly saved most of that break until the US Open. I prefer that they did that before the US Open. Does that make sense? So maybe like back in here, right? Like London session, they kept stalling 9.1. Do you see this? So London session was good that they held 8.1, right? But I didn't like that they stalled 9.4, 9.6 here. Does that make sense? So like this would have been the better time overnight to try testing this area back in here. Do you see this? So even though like this was a good structural hold overnight, not the best break. So I would say I think it would have been a little bit better if they did it closer to like 3, 4, 5 a.m. versus like waiting till 9:30. So not really. They didn't do that before 9:30. That happened after 9:30. So I would say that that's probably the first condition that wasn't met. They didn't take out 9.4, 9.6, 01 before US Open. Okay? Everyone's on the same page? That condition I would say wasn't met. Okay? The next condition was, although we are not required to test 6805, 08, 12 overnight, reclaiming it could help in terms of expansions / exhaustions, okay? Because that we could definitely exhaust off that area, right? Did we test 6805, 08, 10, 12 overnight? No, right? So we were already at a risk of potentially exhausting, right? Especially if they don't come back and retrace immediately. The next condition was we wanted to clear properly above 4799, which would give us at least some odds of testing 6808, 6812. So let's put this on maybe a 1-minute chart. So when they came back in the morning and they tested this spot here, so where's the 9:30 open? 9:30 open, they had opened us at 6788. Okay. Did we open at a minimum of 6799? And I did mention that opening at 6788, it's not bad for Friday. It's just at that point the risk is too high because we already tested 6752, 6758, 6766. Do you get what I'm saying? Like we already were at some risk because we stalled a neutral range too around the 6805, 08, 10, 12, whatever. So did we open at a minimum of 6799 come Friday open? This was the real-time open. No. Okay, so this condition wasn't met. Everyone's on the same page? That condition wasn't met. If this condition isn't met, what could have offset this? What would offset us not opening at 67.99 and higher? What would be the offset here? What could have offset some of this risk? So we opened basically like 11 points lower than we would have wanted. Okay. 11 to 12, 13 points lower. Because I would have preferred around 67.99, 01. Okay. So what would offset that? Yes, and probably taking out our 68.08, 68.10, 68.12, right? Because we have to retest that neutral range here, right? So if we had taken out 08, 10, 12, then we probably would have had a decent odd of like maybe sustaining. I know a lot of it is like news based, but do you guys see how like conditions are so important in terms of this? Because like maybe had they opened here, we could have tested 10. Do you see what I'm saying? Maybe had they opened a bit higher, we could have actually captured 16, 17, 18, which I was saying would be potentially some mid overheads overnight. Okay, so like this area here, and I think that's on the report too. Pretty sure it is. I said there's a tiny, the next condition is there's a tiny overhead right around 68.18. Okay, so if we had opened at 6.7, and this is really cool, because think about it. I wrote this before any of this happened, right? So try to think about how the ranges are predetermined. So where we opened, based on where we would have preferred to open, gave us about an 11-point reduction. Had we opened here, we probably could have tested 68.10 out at a minimum, which could have helped reduce some of the volatility, right? Off of high range, we would have tested 68.17, 75. Do you see that? That's the differential between the highs, okay? And between where we open versus where we would have preferred to open. If this was maybe off of the weekly high range, which I think was 68.12, do you see how we could have maybe achieved 68.23, 68.13? I just want you guys to see this so that you can maybe understand it from like a different perspective in terms of range conditions, because like this stuff is really, really important. So do you see how this offset versus where they actually open versus where we would have preferred to open versus where they actually stalled the highs are all correlated to 68.17, 75, 68.23, 50, 68.10, 08, 12, whatever the case is. So I know that these areas were valid. I definitely know that the overhead near 68.18 and 68.22 to 23 is valid. Do you guys agree? Based on the actual range that was given and the reduction that they gave. I would say that this was a valid analysis, that would have definitely been the overhead. Had they actually opened us here, they probably would have tested here, okay? They probably might have maybe stalled a little bit here, but maybe we could have actually tested here, okay? Is everyone in agreement there? Like that could have been the case. Maybe that would have reduced volatility a little bit. I know catalyst news, obviously, some of that's not in our control, but like it's just so that we can see. So we know that those conditions failed. Okay, so I would say that condition failed. We failed to break 68.08. That condition failed. We didn't break 68.12. Okay, do you see where conditions started failing a little bit? And at this point, it becomes super important that you hold. Okay, from the actual weekly report, we're basically within a battle of two zones. Okay, so we already know that essentially they're battling two zones, and these are the areas that we're battling between. So we already know that if they fail this area here, they could easily bring it back to our annual ranges. I'm just going to switch the screen, guys, okay? Can you guys see that one? So these 356 to 346 points, they're aligned with this 6624, 6658, okay? And we'll go over that in a second, but we basically wanted to avoid trying to come back to this range here, okay? Because that could take you all the way back to the 6400s. Everyone's on the same page? Because these are the ranges. This is where we'll start calculating it together, just to kind of see where things kind of shifted. So then when they stalled there, the first immediate break was right here. So as soon as they started failing here, okay, you see how they started failing 67.88? They were still holding 8.4, but they weren't able to break that 9.9. Do you guys see this right here? Like this right here? This was a very bearish signal right here. Okay, because this implied that if they stall again, and notice here they actually tried holding 8.8. So they were trying to hold, but they weren't sustaining. Then here they held 8.8 again, but instead of breaking 9.6, you know, they started stalling 9.6 again. Okay, so they were definitely trying their best to hold off the zone area, and they just couldn't. When they took it out in a single stick, they took it right back to 7.6. Okay, which we already knew that was the major overhead. So it's like it's your same conditions are just repeated. So we already said that while we could afford some risk back to this area, it's best to avoid them now, right? Do you think after stalling 68.10, 12.08, that revisiting 7.6 you're going to hold the line? Probably not, right? Like that now increases your volatility by a lot. They not only took out 7.6, so I know that these areas are right too, because look, this is a stall of 9.7, 9.4, 9.6, which we failed to achieve during London session. They took it directly to 7.6, which took it directly back to 6.6, 6.4, 5.7, 5.8. Okay, which were the next ranges that we're working with. And then from there, what was our big spot that we talked about on the for the week? That if we fail this area here, this is a lot of risk. The 6.744, right? They failed 6.744. Do you see that? Do you see how the risk heavily increases here, guys? Like, I just want you guys to see it so you can see what we're talking about. What was the ideal major weekly support that we discussed all week? This was a very ideal major support that had we maybe just done it earlier in the week, it probably would have been better, because then we would have at least had some odds of sustaining. This was the weekly ideal area. We wanted to try holding off 67.22 to 32. Okay? Everyone's in agreement? So do you see how this fall immediately takes you back to the 67.20s? I just want to make sure everyone's on the same page here. Where did we see our first green stick? Which area did we see the first green stick on this drop? And this is a pretty steep drop. Where was the first green bar that we saw here? $67.20s, right? 67.21 was the first green stick, and they retraced it right back to 3.3. So do you guys think the 67.22 to 32.33 area is valid? We have to just make sure that our areas are actually valid, right? We have to make sure that they actually imply or increase or decrease volatility in range, right? So that we're measuring off these areas here. So I would say that yes, 2.2, 3.2 is definitely valid. Like that's the first exhaustion stick that they saw in this nasty downtrend, but there was no continuation, right? What did you fail to do immediately after right here? What did you fail to do immediately after? They tried. They couldn't quite. Then they did. What is it here that failed? Yeah, ideally back over 4.4. They did test 4.4 though. Okay, so could this help us a little bit this week? I know we didn't get the full range back, but they at least retraced 4.4. They didn't get back above the channel being like the 4.8 to 4.9 area, but they did test 4.4. Okay, so this could have had some reduction in volatility, but usually off a major range like this, you would have wanted that to happen right here. Does that make sense? Like off this 1106 stick, like them even back testing here and then failing again right here, like all of this kept increasing volatility. So that was one of the first conditions that like partially passed but still technically failed. It wasn't soon enough, and it started to increase risk, especially with no follow through. Like this non follow through right here at 1116. Do you see this? And then this is where you start losing it. So Then from here, our next major support was what? What did we say? If you fail this area, then you're probably heading back to the bottom of the zone, right? They took it right back to the bottom of the zone, 66.88, 66.89. Okay. That was your next exhaustion area, right? Everyone's on the same page? Is this a major weekly support between our battle of the two zones? Yes, right? Like that area giving up, this is where you could now start implying your 346 point ranges, okay? This is where now at this point you're not only at risk of losing this whole zone area and you re-enter the means, now you're back at risk because like we already know that 66, 66, 58 down here are important ranges, but at this point now you're at risk of heading back to 66.40, 66.23, 24, right? Like these 346 point ranges, maybe even testing all the way through to the bottom of the zone. So, and they did a really good job here. Like if you pay attention, they did try retracing the zone here. So even though this wasn't like a full solid structure, I would give this like a, this is kind of neutral, okay? Because this means that they could retrace this zone. Does that make sense, guys? Like just kind of like how 67.22 and 67.48, because they did take out 4.4 but not 4.8, that is what's leaving this a little bit conflicted. Is everyone on the same page? This means that even though they took it lower, they could still maybe revisit these areas this week. So this was a good hold too off the 66.40, but then here, same thing. Remember we had those flips at 136, 140, and they just couldn't retrace during that mid-session. Like, I feel like had they retraced here at mid-session, we probably could have gotten back to here. Does that make sense? Like, had they actually broke, sustained, whatever, they probably could have taken this back at least to this channel here. Okay, 67.40s. Everyone's on the same page? They couldn't, which ended up causing us to go to our 66.06, and then boom. End of day real-time low was 65.89. My max, like I said, for real time was 6588. So I think that was pretty accurate that that's where they stalled. I haven't actually measured this yet, so I'm measuring it for the first time with you guys, but I just wanted to see, like from the real time range versus where they stalled, it was about 84 points, right? Versus this range here is about 100 points. So 84 points, you know, I wonder if, yeah, this probably could have taken us back to 67, 52, 54. Do you see what I'm saying? 57. This area here, 7. So like I think that that's pretty valid, that they could have actually taken us back even at a minimum off of the 40 spot. Maybe it could have taken us back to 67.23. So do you guys see how the ranges that were implied in real time based on where they actually took us to could have still gotten us a break of 4.8 and 4.9 to 5.2? I just need you guys to see this. So this was the reduction in range. This is the actual implied range, so based off where they stalled. So it was about 84 points. So that could have gotten us back to 67.22, 23, or potentially a break of 67.48. So I know that those areas are still valid heading into this week. After the bell, they continue this even lower, okay? Bringing it all the way down, guess what? 132 points, 133 points. Do you see that? Which likely would have been the max risk range that you'd want to work with, or like 150. Right here, which is half of the 346, 356, 150.5, 151. So do you see how they extended that like 132 to 151 point extension into the close? And they actually took it to the next channel, 65.40, brought it back to 6652. When I was doing a review myself, I noticed that there was a lot of confluence around the 66.52 area in the past. When I went back and looked at this in total, so I figured they're probably working with the 256 point ranges a little bit here. From where they actually opened the session, they held 256 points. Okay, so off of 8.8, we hit about 248 points. Okay, so technically they could have pushed this maybe a tiny bit lower to like the bottom of the channel, and that would have been around 3.3, 3.2. Do you see what I'm saying, guys? Off of where they actually opened. Is everyone on the same page? That's what would make the whole channel. So these will be some of our support areas to start the week, okay? And this is off of the real-time open from Friday, which is also our zone. So it just makes sense because it aligns with the zone theory. So technically they had room to bring it all the way to the bottom of the channel, but they avoided that. They brought it back to the means. The means implies what? What does the means imply, usually? And you can also see that this was a 256-point range off these lower highs right here. Okay? And this is off our stall of 6797. What does the means usually imply, guys? So I'm just showing you guys the, like, where they closed, where they stalled, what this could mean. So off these actual highs here, 6806, 256-point range is around 6650 or so. So technically we closed at a 256-point ratio from highs. Yeah, the means usually implies volatility. So that's where range could get very whiplashy, right? So if they kept it in the channel, probably would be a little bit more of a consolidated range. So where they actually closed at 5.2, okay, right here, that could imply a retest of 6808. Do you see what I'm saying? Which is what we failed to do. That was part of the reason why all this volatility occurred. Does that make sense? If we're looking at this from like the entire week range, so from weekly highs to where they stalled here, where they closed, it's a 260-point range. So where do you think that we'd have to ideally open? So I want to start making some of our weekly conditions, right? So at a minimum, you probably want to open at least above 5.6, 5.7, 5.8. Does that make sense? So that you're not opening beneath like a 256-point range from your all-time highs or weekly highs or whatever the case is. Because at that point, then you could extend 346 points, correct? If you do a midpoint, that's maybe where you could hit a neutral range around 65.10, 65.08. That's probably going to be like some of maybe these past structures right here. Whereas if you extend full range, then you're at major risk of heading back to those 64.40s or 64.60, sorry. Do you see what I mean? And this is mostly just measured off here. So like even off like the opening ratio versus there, that could take you back all the way through the next means in the previous channel, which is 6.4, 3.2, 3.8, 4.2, so on and so forth. There's also some structures that I showed you guys on Wednesday that had some really ugly bearish patterns, right? So like this 10-day doesn't flip over until the 20th, right? So do you see how this could take you back to these ranges here? Like these technically could bring you all the way back down. Do you see this right here? That would be a 346-point range. That would be enough to take out this structural low right here, which is 6843. Okay, and that's 6880 or 6480. So from a structural perspective, we're at some pretty big risk in this area here. Do you guys agree? We have similar patterns on the 12-day that run through the 24th. Okay. I haven't really checked beyond that, but I would imagine that most of these now are kind of bearish, right? This 16-day runs till the 30th. And a lot of these flipped over on October 6th and 8th, okay? What do you think has to happen here? They could flag this 18-day. This could turn into a bull flag. They could take this right back. 1, 2, 3, 4, 5, 6, 7. This is the 7th bar. 7th bar is usually major exhaustion, major expansion. And they could flip it right back on the 16th, right? So we can keep that scenario potentially open, considering it's ahead of the 18th, 20th, 24th, right? So markets could give us some odds to negate, but it would have to be fairly quick. Does that make sense? So our odds to negate have to be within like the next few days. Do you see what I'm saying? because then otherwise we're going to be at some major risk here. Okay? I do know that some of these also run through like the 16th. I think the only frames that we had that flip over today, which would be Friday being the last closing session, was like the 5-day. I don't remember if it was the 15-day. Yeah, the 15-day, which is linked with our September 22nd. That was a very important flip day. So these ones are in correlation directly with Friday's price action and Friday's close. Okay, so sometimes that's helpful because you can measure off those frames. Does that make sense? So like in terms of like those specific directional days. So like the 5-day, obviously the weekly, that's linked to the 29th, 22nd. That was the volatility period that we had last. The last time this had a major exhaustion was back in here. So we could maybe even use like the little flag pattern that we have on the 5-day in terms of like areas that we'd have to protect, right? So clearly the midpoint, which is where that structure is based off, that 10-day, 12-day, 16-day, is off the median supply of this bull flag. Do you see what I'm saying here? Right here, this little mid-supply area here. So that now becomes like a pretty crucial area of support. I think the only way that they could avoid that from happening is if a lot of this is from the 13th and the 16th is the date to negate. What do you guys think that means? Otherwise, we're at risk until month end. There's literally risk all the way through until the 20th, 22nd, 24th, 30th on these structures, right? So these are the structures that keep us at risk. Okay, let's see. And there's probably more. I'm just giving you guys some examples here because these are some of the really nasty ones that are putting us at some risk here. These are some of the ones that maybe could negate and then they could try flagging this. Okay, so this one is also bearish. 8-day, 9 days also bearish, right? This could have some odds to flip as early as the 16th. 7-day flips over Tuesday. This could be a conflicting time frame, so this is where we could maybe see some volatility. Do you see how this structure already took out this structure here in terms of that? I need you guys to try understanding this from like a structural view. So from a structural view, 65.88, that's based right around our actual like structural support range for our zone. What do you think we'd have to do in terms of conditions? So this is where we have to start being very strict in terms of like the conditions that we set based on structure, based on price. These are also really calculated areas for us. This also flips on the 16th. 4-day flips on the 14th. So you can kind of see how this one's now same idea. It's like this 64.88 now becomes like a major support area here, right? This area, this next zone area that we talked about. Mostly if we can avoid heading back to this previous zone. So what do you guys think the conditions would have to be for this week? And specifically starting Monday, Tuesday. What do you guys think? Just based on this and based on this theory. So we have a little bit of a neutral odd here for the 14th. What do you guys think would have to happen here? And last week's open was that 6-8, right? So we still had, I do want to double check the ranges there because breaking off of the weekly range like that they still supported. I think the 256 is probably going to be around this area here, like 65, 10, 11. So I would say that that area could be a pretty big support range. And we're tracing back to 9796. These could help put you at an odd of maybe getting like the full range back up to, so half of like this range in here is probably close to here. Yeah, I think the first condition is going to be that they definitely try retracing at least back to, let me delete this. The first condition I would say is going to be that they minimum open of 6556, right? Maybe I don't know what kind of news we had this weekend, I haven't really checked yet, but if we had some decent news this weekend, maybe they could retract this back even to, you know, 558. But the very first condition is going to be that to get this even somewhat neutralized is to get back above 88. Okay, that'll be one of the first conditions that we'd have to do. And by Tuesday, right, since we have some odds for Tuesday to try neutralizing things, I would say that it would be probably pretty important that by Tuesday they try to net neutralize this. And it doesn't necessarily mean that they, you know, have to get all the way back through here, but I would say like at the very least maybe back above 6622. What do you guys think? Like these could be some of the conditions that they'd have to do. I'm not sure how much of the range that would be from this candle here, but I would say you like to get back above like a decent spot, you'd need at least back 6674, 76, but I think like even a 25% ratio would be back around 6606, right? 33% ratio is probably close to that 6628, which is basically retracing back these structures here. So from a high range, low range, probably close to that 6620. Yeah, it is. Okay. So yeah, probably need to get back at least to the 6620s, maybe even closer to like getting into the channel. I feel like that would be a good condition to have at least some reduction in volatility, which is about 25 to 30% of the range anyway. Do you see that? If they really wanted to offset volatility, we'd probably have to get back to core ranges. I feel like the only way we could do that is if, like, see how this aligns with the 6622 areas. I feel like the only way that they could do that is if they opened at a core spot. Does that make sense? So like, let's say they open at like 6571, 6568, 6578. Then we might actually have a chance of getting, I don't know, maybe some like actual breaks back to 6670s, 6680s. Like this area here. Okay, I'm just gonna mark them just quickly so you guys, they're not exact ranges, I'm just giving you guys an idea, okay? So maybe if they open us around here, this area here, let's just say we have an opening range here, maybe we can get to here. Okay, does that make sense? The goal for this week, I think, since we're at risk all the way through till month end, is going to be to reduce volatility. Do you guys agree? Before the 16th, because the 16th is a multi-flip date. And I feel like the only way to do that would be to, at a minimum, get back to core ranges, but even ideally try to get back into the area where we're battling the zones. Does that make sense? So like the 6688, 6690 area, because that's what would put you back in this zone battle up here. So that could be a condition that would maybe have to be met by the 16th, at least to minimize some of the risk. And it doesn't mean that you have to go all the way back to 6622 or whatever, but at least try minimizing some of the risk here before the 16th. So I think the first part of the week is going to be pretty important for mitigation. Otherwise, we're basically at risk, guys, of like, so if they break this 346 point interval, this is where we could be at risk of like achieving those 696 to 686 point ranges. And that's basically what could take us all the way back to, you know, like our June breaks right here. Do you see what I'm saying? That could really, really, really break down structure. So kind of like right around in here. Those would be like double the range of like 346, 356. That's kind of the risk that we'd be at, which is obviously huge. So, and we've been measuring off of here. Okay, so another way that we can maybe measure this, I know this is getting kind of messy, but sometimes it's hard to write all this out. So since, are you guys okay if I clear this actually now? Since they broke basically beneath here, okay, because this was the big area that they lost on Friday, was 64.88. Do you see how that would also be the same thing as retracing back over this range here if they were to give us those retests? I think there's a lot of confluence around the 66.06 to 66.10 ranges too. When it's unadjusted, it's closer to the 66.40, 41. So like back to this channel range, which is why I think if they can break this back into the channel, basically back above this structural support here, that could really help mitigate some of this volatility risk that we have, because they basically took it beneath by 102 points. Okay, so if they extend this any further, like 132, 122, do you see how there's that 65.10 support range here? Do you guys see that? Kind of like close to here. And that area is pretty important. Similar to like a 301 point range. 301 points is half of the 256 and 346. And that usually is the case when market goes side, like when it gets very volatile, you start trading between mid ranges, okay? So it's the same thing as looking at it as either going an additional 132 points beneath here, or half the range of 256, 346. So there could be basically a battle between three zones. So 6488, 6588, 6688, 6788. Does that make sense? So 4 zones, sorry. If they are breaking this off of 256 point intervals, basically they just have to open up above here, which is exactly where they closed. So like where they closed is not a coincidence. Does that make sense? So they basically closed this just beneath a 300 or 256 point range. Does that make sense? From our measured candles from our first and second, this is when they started breaking structural support. So that's why a minimum open has to be above these 5.3, 5.6, 5.8 areas, okay? Like at a minimum. Whereas if they maybe open it here, closer to 6.4, which is still the means, that could still imply volatility. Whereas if they open this closer to, let's say, those 70s that we talked about, that's what could really help reduce risk. So that also is in line with us basically opening above a 256 point range from these closing points here, okay? If they were to open at core areas. So that also makes sense then if they're gonna try saving structure like that. And then the big areas to retrace, these should be aligned with core too. That's like the 67. So do you guys see where there's the confluence? So if they do open at the 65.70s, that could be in line with the 66.70s, which could return us back to 6722. There's just a lot of risk here. So, and this could bring you basically an odd of getting back to 6788 and back to that prior zone. So I think that's probably enough to kind of understand like the metrics that we're working with here. Do you guys agree? because this is probably the 346. Yeah, it is. Okay, so and that would be like getting back to these areas up here, like 7.6, 7.9, so on and so forth. And I think if we just measure with this, like this should be more than enough for us to like understand structure here. The 6.4, 6.6, whatever range this is. Yeah, that's what I was thinking too. So if they did want to gap us up like that, then the major gap ups that maybe we could see, if they did like a 246 point gap, it'd be like closer to like 6.641, like the channel range, right? Or, and that's like a minimum, or, you know, off of 5.4. Okay, 5.5. These could be some like really massive gap scenarios. Or like I said, if they actually bring us back above 6.666, 6.668, like these could be some gapping scenarios. If they really want to reduce risk before Tuesday, remember how I said to really reduce risk, they'd have to bring us back to these 70s by Thursday at the latest, which is technically Tuesday or Wednesday, because it has to be ahead of the flip. The way that they would really reduce risk is if they were to bring us here like immediately. So it'd be like a big gap, retrace above 66.40s, 66.66, 66.71. And that's how you could be, that scenario would be like the odd of negating by the 16th. Like fully negating by the 16th means you have to get back above 6.788. Does that make sense? That would be like a full negation scenario where they then basically negate this entire downside and then put it back in play through the 20th, 22nd, 24th month end. I was expecting a pretty volatile Q4 with some really wide range to work with, so this is kind of interesting that they're doing it like this. Well, I think that's what we'll work with. I'll try setting the conditions. There's a lot, obviously. I don't want to overwhelm anyone either, but I feel like just for starters, we do have to open ideally above the 66, 53, 56 area, like at an absolute minimum. Ideally, if they can open it in the 70s or 6.588, that'd be even better. And like I said, if they can somehow get an opening range back to here and even like 50% back of this range here, back over 6.4, 6.6, or even around like the 7.7, 7.8, this could really offset a lot of the risk that we're at until end of month. Because one of the worst things that could happen is if they retrace this up, let's say, like a big green bar. Okay. What kind of pattern could this form on the daily? This could form a nasty 3-bar down scenario, right? Where you could see like continuation. So we're obviously trying to avoid that. And because there's multiple structures that don't flip till end of month, this week specifically is very important that we negate risk, okay? So retracements are going to be very crucial, I think, from now till the 16th to keep us potentially extended through the 22nd and month end. Otherwise, there could be continued risk for the duration of October. And we did talk about potential delayed risk for ES. So it's kind of interesting to see it play out like this, that they might actually continue the risk now. But I have a pretty good feeling that they'll negate this. What do you guys think? Because they didn't fully fail every condition. They failed some, not all, right? And it's funny that they took it to the channel, but then brought it back above 5.2. So they brought it right at a line that's like right in alignment with that 256, 346 point range. And I'm pretty sure when I looked at this, and I looked at the April ranges that we were working with, like back in here, right? These are annual ranges. Do you guys see this? Annual range is about 17 or 1800 points, like this area here. So if they were to gap this around 66.22, so just so you guys are aware, this 6622, 6624 area that I was talking about, that's an annual range. So if they were to, let's say, even gap around there, that would really reduce a lot of the risk that we're working with here. Because basically what they did is they're stalling annual ranges here. Do you see what I'm saying? Like annual range is about 17, 84 to 1800 points. Do you see what they're doing? Look. Isn't that interesting? They're basically stalling annual range from this open closing date. So losing these areas here is pretty vital. And if you take this annual range of, like, let's say, this area here is like, okay. Off lows. $13.79, $13.78. Are you guys paying attention? Because we did talk about these being annual ranges. It's like roughly $13.78 to $13.84. I just want to double check one thing, and then I'm going to end the stream to finish this. I'm pretty sure when I looked at this, like unadjusted, off opening closing ratios, which is close to here, there's a lot of alignment with this zone area here, okay? Especially with like this overhead range right here. So that's why I think it's very important that they try avoiding going back to this previous zone, because this previous zone is what could put us at major risk, okay? And the last time we had like major candles like this, so from like April 4th, remember this big drop right here? And I think it was similar type range, like they had a 361 point day that day. This is a little bit less, so that day they took out 346. Do you see what I'm saying? By like 10-15 points. Here they took out 256 by 10-15 points. So the risk is a little bit less than it was back there, but basically where they're holding here is, you see these closing points off these candle risks here, like back in here. Do you see this? And our annual ranges is around 1379 to 1384. Do you see what I'm saying? Like this area here, they did the same thing. You see how like there was about a 10-point offset of like 361 versus 346, 266 versus 256. It's the same thing, or 246. They basically took this out 1368 versus like 1378. So there's like a 10-15 point threshold. So the most important thing, but then they still tried closing it above 256 points. So I feel like here, what they'd have to do to really negate this is they probably need to, at the very least, try opening above, like, if they did open above 84, 88, that's obviously going to reduce the risk. But you see how that's also in line with like these ranges here, guys? Off the volatility sticks from back in April. So there's some confluence around 8.4, which is also where these structures are formed around. I just want to show you guys. These are annual ranges. So like these structures are not, they're not just random coincidence, you know, like this structure here with 80.99. Do you see what I'm saying? Right? Or like this structural hold right here, or right here. Like these are, those are some really solid structural supports. So maybe above like here is closer to like 66.05, 66.13. That would kind of neutralize things a little bit. If they did like 13.84, probably closer to like our 66.20 area off these spots in here. Do you see what I mean? So yeah, these are definitely very important ranges, I think, to try retracing like early this week. Like at least get back in the zone, and I don't care if it's like 65.88, 6606, 6610, 6618, 6622. You get the point. It's basically just to get back to this zone area here, okay? I think that would really help reduce some of this risk that we're currently with, because if not, then we're basically back at risk of, you know, failing and heading back to this previous zone right here, which is the 6488 area. And I think based on where they stalled highs, a lot of this is directly in line with here too. So do you see this? Look at that. That's the 1384 annual range. Isn't that crazy? These are directly linked with April 4th, 7th, 8th. That's pretty cool. So they're basically, they just went right beneath an annual range here. That's actually insane. Do you see that? That's really cool. So that's also another confluence with like, well, maybe had they just broke a little bit higher, didn't stall there, then they could have actually had a better structure. But, because they did take out 6801, 6805, 6810, technically speaking, this still has a chance to come back and retrace for Q4. Do you see what I'm saying? Like, it's kind of like a big battle here between these ranges. And that's what, let's say, if they actually did come back and retract these areas, like 6801, 03, 04, whatever. Remember how I said that these could be the extensions that we see to 7K on the year? Isn't that crazy? So if they're able to really negate range this week, then 7K could still stay in play for Q4. And a lot of this is because they already did meet these conditions up here of testing 6801, 6808, whatever, 10, 12. But there is a bit of a battle in between. And then this range in here, where they stalled, is half the range. 696, 688 is half the range, guys, okay? So these are half the ranges from the high range. Do you get what I'm saying? So them sustaining here means that they sustained half the range. Okay, so that's kind of where these 696, that's 346 times 2, just in case you guys don't know what that is. And that's kind of where these increments or dates come into play right here. And that's what we're currently measuring off of here. Because basically if they fail to, you know, sustain half this range, guess what? They can come all the way back to here. Do you see what I'm saying? That's what would really increase volatility. And like the worst case scenario would be if they basically brought it back to like where this inverse head and shoulders pattern was, like right here. So avoiding that this week, I think, could obviously help us offset quite a bit of risk in terms of... Isn't that really cool though, that like this is this is really cool, because look, this is 6688 or 6691. This range from here to where we had measured the annual extension is also around 686 points. Those are all linked with 7,000 zone. So like basically the 6999 to 7032 zone. Okay, I think that's more than enough of a like big refresher here. I'm gonna put out some conditions just so that everyone is at least somewhat prepared this week. We're gonna kind of have to also just take things day by day the next few days just to kind of see if things stabilize a little bit or not, okay? But definitely have like wider ranges for the week, like 128, 132, 246, 256, right? Point ranges could be applicable, kind of like what we saw happen back in April. And I actually haven't measured the time range. That's one thing I haven't done yet, but I think the intervals are probably similar. Like I would imagine that, I would bet money that these intervals are probably linked. So I already know that we were working with the 81-day interval. This is probably, like, remember how we said we have like odds through basically December 1st or whatever? Like through these time ranges here, especially off like lows and where they held like 70 to 80 days or whatever the case is, like close to here. I wonder if these highs right here were basically the midpoint. So, you know, like half of that would be like the 40 point range or something like that, or like 40, 41, 42 bars. So this is where we started hitting about half that range. Does that make sense? Like right here, this is like, these are half the ranges here in terms of time of like when we entered that zone, like 688 or 6788, sorry. So from like a calculated perspective, the 75% time interval would be what, probably close to like like 63 days or something like that. And I would bet that's probably month end. Yeah, it is. Okay. So from a time perspective, month end is going to be about like this range here is basically the 75% of the time interval in terms of like the window of risk that we're currently working with. Okay. So this is probably the 66% mark, and we're working with increments of thirds. So that's actually really cool that we're working with increments of thirds, which is like the 3, 4, 6. And from a time perspective, they're basically like 66% of the range is about 54 to 55 days. Isn't that really cool? So the 16th, guys, this is really interesting. The 16th is also 66% of the time interval. I know we don't really talk too much about that. 16th is 66% of the time interval. And all of this extends till basically month end. Yeah, it was. Which is why that risk could still be present. And then a lot of the next 66% interval, like if we look at this, is going to be off of like the calculated ranges here is linked to December 16th and 17th, which is the contract rollover. So, and then I would bet that this is probably linked with year end. Yeah, it is. Like end of year right here. Do you see that? And this is also linked with like the half range, 43 bars, is also linked with the 17th of December. So just some days that maybe we could start watching for, and then these ranges here are also linked with year end. So basically, if we can avoid volatility during this period here, this could help keep us in play till end of year, is how I would interpret that, because this is like a huge volatility period here. And then this extension is probably what would keep us going through. And I think it's like 21 days is 25%, so these are probably the 20, like these are probably like the 25 quarterly lots here. Do you see that? And that's actually very, very cool. And then where we're currently measuring right now is basically, if we measure off the actual date right here, like where we stalled and highs, that's linked with November 7th and 6th. Off the calculated dates, like these actual calculated times on like October 1st, 2nd, the 25% mark is going to be October 30th, November 1st, October 31st, which is, well, November 3rd, because the 1st I think is a weekend. Yeah, it is. And that was the deadline, so I don't know. That's actually really interesting stuff though. Okay, let me try finishing this in an hour, because I have a lot to write, and then I'll check back and see where we actually open, okay? Hopefully we get an open above 65.88, like in this area here. The channel would be even better,